the most simple strategy in the world that made me 400K that year was.
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back to Be the Trader, everyone. Today is going to be a great day because I got my man Evan Shunk back on the show because he recently has crossed, and if you don't know, he crossed $1 million in trading profits. He's been sharing his journey on social media on how he grew, excuse me. And so I wanted to bring Evan on to really talk about that journey now that he's made it to where he's wanted to be at for this entire time. Now that you're there, Evan, welcome back to the show.
Good to be back. Always happy to be back.
Love it, man. Love it. So, looking back right now, just looking back, is there anything that you wish you would have done sooner?
Yeah, tracking data right away would have been my wish. Just because it's the style that related with me. Maybe not everyone likes to shift through all the data. It's a lot of work. It's a lot of numbers. But finding your edge and seeing it on paper was really game changing for me.
But looking back though, I know you say
Yeah.
that, and I'm going to tease you a little bit here because we're friends and I know you, and we've talked in the past. And I know you were first a discretionary trader. For those who don't know,
Yeah.
you were first focused on discretionary.
Yeah.
Wasn't it full discretion
Well,
at first?
it was discretion at first with like a mix of like data backing
With
up.
some data, okay,
Yeah, but
and
it was a
then and
hybrid.
okay, and
Yeah.
so do you like what helped you make that switch? So to finally say, I'm just gonna go all data.
Just watching how Gritani and Ducks would focus so much on data um, is what really pushed me to do it. Mimic the best traders until your own style pops around is kind of how the way I look at it. And tracking data is what did it for me. Yeah.
Do you feel like your edge can erode?
Yeah, I do. One, data changes. Two, when everybody's doing the same thing, it's the crowd eventually. It's like the market. It's such a nuanced topic, but I always go back and forth about which one, is how real is edge erosion, or is the market just way too big for us small traders that none of it even matters? And you can make an argument both ways, but over time and after seeing it, I've seen strategies that I used to do not work as well anymore. And I've noticed that the crowd is also there as well now. Like everybody knows about the opening print strategy, shorting the open on gappers. And once I feel like it started getting really mainstream, you could start seeing the data like start getting a lot more volatile than it used to be. And that was a big concern. So yes, I absolutely do believe if the crowd is doing the same exact thing, eventually the market will change its tune surrounding how successful that pattern is.
So, as much as you're open to sharing right now, can you
Yeah.
share at least, because I know people are curious who don't know you, like what is Evan's strategy? Could you just explain
Yeah.
in a
Well, I
nutshell?
used to share everything really openly. And honestly, maybe that wasn't the smartest or wisest idea. But I've always been very open until this past year. I've really closed up a bit on a lot of things I've been doing. Like for gappers now, I have multiple entries, right? Yeah, I might have a little size at the open, but I save my bullets and try to have multiple bullets per pattern in case, if one bullet doesn't work, I still got another bullet left. And it really decreases the volatility in your system. Um, and I don't talk about my other bullet. I don't want other people to know the another entry I found for gappers that I find to be really, really good because I don't want the crowd coming in there and competing for my entries and then potentially ruining it. Because I'm starting to believe that if everyone does do it, yeah, eventually it will get ruined. So
Mm-hmm.
I've been more
You
private.
know,
I have.
it's interesting. So, could you just give us so your main focus would be shorting gappers? Would you just say that? Just so for those who don't know you, just kind of have an understanding.
Yeah. Anything. Yeah. Yes.
Okay. I know, I like to respect your, what you like to
Yeah.
protect, and I'm completely cool with that. I am curious on I talked to your brother, and he
Mhm.
seems very, very systematic. And then I talked to you, and then you still seem like you have some of that discretionary side still to this day. Is that
Yeah.
do you think that benefits you?
Sometimes I guess it benefits me when the market's really bad. When the market is super hot for sure, like shorts are getting crushed and it's volatile, and the market's really strong in those scenarios. Like for 2022, shorts were getting squeezed, short patterns just were not working.
Mm.
We were all getting squeezed, but because of that extra discretionary aspect I had to it, I was losing less money than my brother. He was going
Mm.
pure system during that hard time. So when times are hard, pure system will lose more money than having some discretion in it. Is the kind of way I look at it. So when times are tough, I override it sometimes, and a lot of times those decisions are correct and saves me a lot of money.
Mm.
So that's the kind of way that we kind of look at it.
And then when
But
times are
when times are
great,
really, really good, like right now, being system is the way to go. Yeah.
okay.
My brother's crushing it this year.
Awesome, awesome. And so, is there anything that you learned from discretion that helped you become a systematic trader, that helped you develop strategies for
Yeah.
those who like who may be discretion right now and they're like, maybe I'll try to dabble in there. And so just curious.
Yeah. Absolutely. Just having that discretion approach, like knowing when like what level shorts are getting blown out or finding like liquidity levels that a discretionary traders would look for, things like that, and just having that experience of knowing where to look for these type of things, which I would give it more to the discretion side. If you have a discretion side of seeing something happen over and over again, you want to see why is that happening, how is that happening, and then how can I go test that in the data.
And
So
that's the hard part. And I know some people are, for example, that everyone knows overextension, plays that are run up 100% plus, capitulate and die out.
mhm,
Like everyone knows
right,
that, right?
yeah.
How does one quantify that in terms of a systematic approach, if you will? Are you more so, because I know there's traders out there who's like, okay, that's something I know. How do I make that into a system the way Evan is using a system? Could you
Well,
explain
just
that?
start there. Look for something that's up 100%. What happens when the stock's up 100% at that exact price and you short right there at that level, and then you say you want to cover at the close or wherever. Um, just simple as that. Just go and test the extension
Mm.
percentage, the price of that. I'm gonna test that as my entry, just to test, and then I'm gonna test the close as my exit, and then my stop loss will be, I don't know what, 20 to 60% above your entry. And just experiment right then and there with that and see what you find. And it's just a little doorway.
We cover a lot of information on trading here on Be the Trader, but none is more important than the broker you choose to execute your trades. There are many reasons I use Cobra Trading every day, including multiple order routes where I can get fast execution, great availability on locates for hard to borrow stocks, and fantastic customer service. But don't just take my word for it. Both Benzinga and Forbes Advisor have awarded Cobra for best in class for short selling and day trading. Isn't it time you choose a great broker that you'll enjoy working with? Sign up now by using the link below, and Cobra will provide you with free software for an entire month, plus 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show. I love that you shared that because I know there's a lot of new people who are just not quite sure how to even start that process, but they might have a
Mm-hmm.
discretionary thought process already.
Right.
Now, I am curious though on what has been one of the biggest lessons now that you are here today and you cross your big goal.
Mm-hmm.
What's one of your biggest lessons now that you have learned in crossing that goal?
I think one is quantity in your data. You need frequency, you need quantity. Like 150 samples, I don't trust it anymore. You need multiple years of seeing the pattern working. 1 or 2 years isn't going to cut it. The market can change on a dime. Um, So quantity, frequency in the amount of samples in your pattern, and time of this how many years it's actually been working.
It sounds like there's a story related to this. Could you mind sharing?
Oh yeah, 2022. The only reason we were even red that year because we were using such a high Kelly on new patterns that we found that had maybe like 200 samples in it. but was working for like the past 10 years. Um, and I could have overfit as well. So not overfitting is also something I never want to do. So we started this new pattern with full size. Just no question. We're like, oh, this is gonna work. This is amazing. Look at the data. It looks so good. We're like, oh, you're right. We're gonna make a ton. And we started it, and immediately the first four were max losses, and we lost like 70K. And we're just like, well, we should probably stop this pattern. It's not working. So that was rough. Yeah, and I had so we had the time aspect, but the sample size wasn't worth it. The market changed. Maybe I overfitted, but so I want quantity. I want frequency. I don't want like a pattern coming only 10 times a year.
And for those who don't know, what does overfitted mean?
Overfitting means, I guess, tweaking your pattern too much, tweaking it too much to the point where you're like taking things out of the data that you're just kind of crossing out because there's one small sect of it that showing that it's bad.
Mhm.
Like for example, maybe what like a price range data. Maybe for some odd reason, $2 to $3 plays are bad, but anything above three is good. Like that's just random to me. I think you're overfitting if you take out the twos or the ones or
Hmm.
the penny plays. I don't think price matters too much. And if you're cutting it based off price, that might be overfitting. If you find
So
an
basically
extension
adding so
where,
many variables to try to like
yeah,
make
if
or
you're
take
like,
away so many just to really tweak it
yeah,
to make it perfect.
really tweaking the variables too much. You want to have big samples. The market's fairly random, so you don't want to overfit your variables. Right.
You know, I'm also curious on the whole idea of how many strategies do you run at one time?
Right now, we got about six
And the
right now.
frequency, are they all pretty equal? They're all very dispersed, like everyone's kind of different.
They are frequent. They're frequent. I've been having plays every day now, almost.
Nice. How long did it take you to get to that many strategies? Because I know some people have no idea on the conception of time that you put in to find one. So,
Yeah.
could you give us some perspective on that?
Perspective on finding strategies.
Like yes, on like the time it took you to find
Oh,
strategies.
oh yeah. I mean, the ones that we're doing now, that took us years to find, years to quantify this. We knew there was an edge in an area, and we it took us so long. It was this is the first year we really started doing it. So
Where was the gap
finding
at? Like, where was that gap at? Like, why did it take so long? Even though you knew for years, like, why?
uh because well that's I don't the gap yeah it was gapping on the day. Most of them are.
No, I'm sorry. The gap of like knowledge of like you knew it was there, but like you didn't trade it until now. You said, you know what I'm saying? Like you,
Oh, that took us. Oof. So for me, I guess when I knew the edge was there, probably 2020 is when I knew it was there, but we didn't start getting to the bottom of it until the end of 2023. So 4 years, I'd say. It took us four
and
years to finally find one edge that we knew existed, but we didn't know how to quantify it.
what was that gap? The gap of quantifying it. The gap in terms of what you needed to learn to understand how to quantify. You know what I'm saying? Like the
Oh, the
knowledge
thing, we
gap.
already
Sorry,
had
the
the
knowledge
knowledge.
gap.
Yeah, we already
Okay.
had the knowledge at that time. At 2020, we were already system. I mean, we weren't as advanced yet, but still, we had enough of the knowledge that we could have found it. But the simple, small ways of sometimes quantifying things, and I say simple because how we quantified it is so simple, but it's like so simple that you wouldn't even think of it because it's so simple sometimes.
Hmm.
So it's hard to
So,
quantify things sometimes. Sometimes people, you overthink things, and really it's the most simple conclusion you could come up with. And you're like,
hmm.
really, that was it? That was what we couldn't think of? And
Is it easy for you to give an example without obviously I know that's one that you probably
yeah,
love to keep. Is there when there's something that you can give like a sample that maybe it's not true, just an idea for us to kind of like
yeah, okay.
understand?
In 2020, I can
Yeah.
say back in the day, 2020, the most simple strategy in the world that made me 400K that year was shorting the open on every gapper up at least 40% and covering at the close. That's it. How simple is that? I thought a cheat code. I thought we were geniuses until it all started falling apart in 2022.
How long do you give it to fall apart?
until it starts getting really painful. Yeah, yeah.
Besides the discretionary of cutting stops, like just cutting out because you have experience of knowing when the squeeze might happen, is there other parts of your process that are discretionary?
Lately, no. These past 2 months, I've been a pure robot. We have an algorithm up, and I've just been letting the algorithm do all the work. It's in test mode. It's been awesome. I just watch my computer trade for me. I'm like, this is so sweet.
That's awesome. And so, in basically, you just got to monitor it.
Yeah, it's got to monitor it before fully trust it. So I have to monitor it off and on, but it really takes the load off. Like scrambling for shares and get in. Like that's all gone right now.
Is the goal to just keep it that way and never really have to push the button again? Is that like, is that the
Yeah,
goal?
that's the goal for me. Yeah, unless when the market gets hot, then I'll be there. Trying to long some hot sectors.
Ah, okay. Okay. So would you say all of your strategy are short bias in terms of
Yeah, everything unless it's a
systematized?
hot sector, and then I'm longing. Yeah,
Gotcha. Okay. So is that a discretionary part of your trading process is
absolutely.
longs?
Yes, that's like the only aspect of my discretionary where I really make some pretty decent money. Yeah.
Mm, cool. Cool. Any advice for people who may be long bias and they are discretionary for what they should be looking for in terms of when it comes to longing?
For me, the only thing I can say is hot sectors. If you find a hot sector, that is where you want to be strong, bullish, and long. That's the only time I find success in them. The other way better long traders than me, go check them out and ask them these questions because I don't know how they do it. Unless the sector's hot, then I know how they do it. But other than
When was
that,
the
I
last time you've been longing? What was the last sector that you played?
oh, it was I think it was APDN. It was one of those
Hmm,
penny plays that went up a dollar overnight, and I sold. I forget the exact. I mean, I'm sure it's on my Twitter. I could go
that's
find
okay.
it.
Nah, that's
Yeah,
totally fine.
yeah.
No, that's awesome, man. How's it feel, man? I mean, I know you talked to me a lot, and you really wanted to hit this milestone. Like, how are you feeling? Where's your head at right now? Has anything changed for in terms of like what your goals are now?
It felt amazing. Well, at first it didn't really register because I was just thinking, well, I'm up a mil now until tomorrow. That was my first thoughts, but it didn't happen. By the way, I'm flying through a million. I'm past 1.1 now. I'm zooming. I think I'm at 1.2. I don't know, but
Amazing, brother. Good job.
but after a while, it did feel good. It was sentimental. It was a long journey. It took me 6 years. It felt accomplishing, and now I have the same goals, I guess. Now got to get to 5 mil, and then got to get to 10, and then 20. It's just
Without pushing buttons.
yeah, this time, yeah. And now I can do it in my sleep.
Oh, that's awesome, man. That's awesome.
Yeah,
Now that you are here, it's different to ask this question. I've asked you this a long time ago when you first started to find success and I think it was in 2021, 2020. I can't remember what year it was, but I do know that I asked you if you can go back in time then, what would you tell yourself? Now, I know I already said what was the biggest thing you learned and you
yeah,
mentioned track more, like track more and
yeah.
getting the data. What would be the
Build your
second
knowledge
thing?
account too. You got
What
to
would
build
be
your
the
knowledge. But I did do that, so I don't have to. I don't need to go back and tell myself that.
What would you tell
Um,
yourself back if you could go back and you could tell yourself one more thing besides the track
One more thing,
everything?
I'd say, no matter how hard that urge is to want to just size up a little bit and make some money and do some stupid sizing and just humble yourself, check yourself real quick and size down by 90% and do not get cocky. And I know you're excited. I know you're super excited. I'm sure you made maybe $200 on your first trade because I'm sorry, you probably got lucky and it went up. Just humble yourself real quick because it's gonna you're gonna get checked and
Can you share a story of when
stick
that
to that
happened to you?
tiny percent side. My first trade, one of them, I think I didn't. I remember I made like $300. I remember Tim Sykes alerted it or something, and then he sold, and I held on, and it went up another 60%. And I thought I was so good, and I was like, Tim Sykes, thanks, man. Look at this. I just made $300 on my first trade. You're awesome, dude. And and like the very next trade. I like thought, all right, I got this, and I lost like $2,500, and then so don't do that. Just stick to your tiny baby size until you start seeing how wrecked you can get with that tiny baby size.
That's right. That's right. So I'm curious, man. Is there any long strategies you're working on?
It's so hard to find long strategies in data, especially in small caps. They really are biased to the short side. You can
What about
find
large
long
caps?
patterns, huh? Large
What about
caps.
like
Yeah, we're taking a look into large caps right now. It's much more difficult. I'm actually having a hard time even thinking where to begin to find edge in small and big caps. Um, it's not the same as small caps. I'm guessing. Obviously, I think it's because small caps are way less efficient than big caps, I imagine. But small caps, the long side, you can find a pattern there, but your win rate will probably be no better than like 60%. You have a 60% win rate. That would be a good long pattern in the data. And it's hard to find. I think long patterns are more, you got to have a discretionary aspect to it.
so speaking of percentages in terms of probability of success, I'm curious on are you all about probabilities over like risk reward? Like
Yeah.
where's your fight at and could you explain?
Yeah, it's all probabilities, it's all statistics, it's all data. My RRs are like normally maybe around 1-1, even 1-2 sometimes. Um, so my risk reward is never that amazing, but my probability and statistics and data is.
So obviously you're heavy on like if the probability is there, I'm playing. Like that's all I'm
Yeah,
playing. It's probability
yeah,
versus risk reward. Okay.
correct. Always. Yeah.
Did you at one point were you trying to do a mixture of both? Like at some point during your systematic approach? You know what I'm saying?
Yeah, we found ways to have high RRs in some of our patterns. But then the slippage almost makes it not worth it. Because when you're sized in so heavily on such a tight risk, especially with the small floats that we play, let's say I'm sized in based off a high a day, and
Yep,
that
yep.
high a day is only like a 10% risk, right? So I'm sized in pretty heavily for a 10% risk, but then that stock will fly past high a day by like 5 or 10%, and now it's already almost minimum 1.5 to 2 of a max loss rather than just one. So slippage I found really affects the RRs I've found. So we don't like to go that route too much because of how bad slippage can get.
Do you at least have a minimum of reward that you want to find in a like let's say you find a strategy that's like 99%, 95%, 90%, just high percentage of success.
Yeah, okay.
But do you still look for some type of reward, like some type of minimum, or do you just look
No,
for the probability and then say let's fucking
it's
go?
probability statistics. Yeah, let's go. Let's hit it.
Cool.
Yeah.
Well, look, brother. Look, I know people are probably going to be like, you know what? I want to ask this guy way more questions. Where can they find out more about you, Evan?
Hit me up on my Twitter. That's pretty much where everything is. Eshunk8. I haven't been as talkative lately. Maybe I'll step it back up. We've really been working on the algorithm lately, and also sorry I don't share as many open as my strategy as I used to. Sorry about that, but I'll still share some things. And that's all I gotta say.
Awesome, brother. Well, look, man, it was a pleasure having you back on the show. And I know people are going to learn a lot of things. And if anything, we'll talk to you again in the future.
Great, good to be here. Thanks again, Alex.